Let's face it, there are only two ways to make money in this market environment. I will go over those for you. What is going on, traders? You guys come to this channel for the straight no BS talk, and I'm here to give it to you. I'm tired of seeing folks comments in the Discord, on YouTube, social media, whatever, saying that, hey, I just bought a reputable company, a quality company on the dip, and now it's going down. Fuck my life. What am I doing wrong? I'm out of the market. To those people, I say, guys, what are you doing? That is not the way. Like, what are you doing? You're clicking buttons on your screen, hoping that something happens, and you are clearly getting disappointed. So what are you expecting versus what is actually happening? The NASDAQ is near a bear market. We have interest rate hikes coming. We have major price instability. The economy is slowing down. The Fed is looking to tighten monetary policy in an economic slowdown because their hands are tied. We have a geopolitical conflict going on in Europe, which is affecting the global markets. If you are buying a profitable quality stock on the dip with relatively low PE ratios like Google, for instance, or Alphabet, and the stock hasn't immediately gone up, and because it is down, you are taking that as a sign that you need to exit the market entirely. But if the market was super green and things are trading at an all-time high, then you are okay buying NIO at 65, or you're okay buying Netflix at 600, or Facebook at 300. This is not the way. And I know that a lot of you watching this don't fit into this profile, but a lot of you do. And this is no indictment on you guys. I'm just trying to help based on the commentary that I see. And there is a concerning number of comments about, folks buying quality companies on the dip and then capitulating because it hasn't gone up immediately. What are you expecting? We always talk about this, but trading and investing are two different things. Trading is a skill. It's like a sport. And investing is a strategy. You want to look at a company's financial health. You want to look at its ratios. You want to look at all of these things and determine if you like the company, not the stock, not the ticker symbol, not something that somebody on YouTube or another social media platform told you to buy, but a company that you are okay investing in. A lot of the same people capitulating right now are the dip wishers, the ones who said, oh, I can't wait until Apple's at a 15% discount, or Google's at a 20% discount, or the NASDAQ is in bear market territory. I missed the opportunity to get in and I really want to get in. Those are the same people, a lot of the same people capitulating right now. That is not the way. I'm going to show you something from thestreet.com, which a friend shared with me, and then we'll get into the two ways that I said are the only two ways to make money right now. But this basically shows that you want to buy the fear. The higher the VIX, this is the volatility index, which is based off of the S&P 500 options. And it basically looks at the options that are traded, the price that they're traded at, and it's a gauge of how fearful investors are in the market. The higher the VIX, the more there is fear in the market, okay? So if you only went off of the VIX and only bought stocks when the VIX is high, the higher the VIX is, the greater your returns are. Surprise, surprise. That's why Warren Buffett and every other famed investor tells you be greedy when others are fearful. Let's look at this. If you bought quality stocks in any of these industries, industrials, staples, financials, consumer discretionary, etc., and you only bought when the VIX was above 40, you basically cannot lose in the long term. This is from 1998 to current. So it's already taken into account 3 recessions. All right, so this leads me to the first way of making money. Now, the first way of making money, you're not going to like this, but it is to start doing your homework. Look at companies that you want to invest in. Use this as an opportunity to reshuffle your portfolio. Get rid of all of these speculative stocks that folks got you to buy in large amounts in 2020 and 2021 that will never see the light of day again, right? All of the Cathie stocks, etc. I know you guys hate when I say this, but I was right about Cathie Woods. Check that video here. Those stocks, you want to reshuffle these into quality stocks for the long term, right? And you don't want to have a day trader's mentality when you are investing. You just don't. So if it helps you to, open up a new account that's just for long-term investing, and you don't look at it on a daily basis, and you really divide the pie in a distribution that makes sense, not more than 10% in any one company, buying quality companies, all quality companies on the dip, whether it's in consumer staples or industrials or financials, consumer discretionary, technology, etc., healthcare. You want to load up your portfolio with high quality stocks, okay? And if you're not confident in your stock picking, then just buy a bunch of indexes. the NASDAQ, the SPY, even a little bit in the Russell 2000. There are growth ETFs like VUG. There are obviously semiconductor ETFs like SOX or SOXL. You can buy a TIPS ETF. TIPS stands for Treasury Inflation Protected Security. These are basically bonds that are issued by the government that, based off of CPI, will adjust in price depending on CPI. So if inflation goes higher, then it will pay you out more. If inflation goes lower, it will pay you out less. But there are tons of TIPS ETFs. SPIP is one of them. TIPX is another one. You want to look into this stuff. Depending on how risk averse you are, you might want to have a 20-80 bond stock split or a 40-60 bond stock split. If you're confused about any of this stuff, talk to a financial advisor. Whatever you have to do your homework in this environment to make sure that your portfolio is set up for the future, okay? That's the number one way of making money. The number two way of making money is more short term, and that is to play options. We wake up every single day neutral. And I know that options to a lot of newbies sounds like the devil, but they are not. They're just another asset class. And if you're buying puts or calls, you cannot lose more than the amount of money that you buy. So if you bought a put for $100, you can't lose more than $100. It's when you start mixing up strategies that involve selling of options is where you can lose more money than you put in. But if you're just starting out, you are not going to be selling options. So remove that from your mind, right? And yes, you could trade options with smaller accounts. You don't have to trade Tesla options, which cost thousands of dollars. You could trade NEO options. The S&P and NASDAQ options are relatively low priced as well. But we have taught thousands of people how to trade options and how to make it less intimidating. But think about it. If there's a market downturn and the only thing you know how to do is buy stocks, you're not going to make money in the short term. So what are you expecting? Again, expectation versus reality. What are you expecting in the short term? That you just magically pick the right price and the stock market is going to go up just because you bought it? No, the stock market is in a clear downtrend right now, and that's okay because over the long term, the stock market is the most resilient investment in the modern world, right? This is the month chart for the S&P 500 or the SPY ETF going all the way back to 1993. So yes, the overall trend of the stock market in the long term is up, regardless of what is happening in the short term. But if you are tired of losing money in the short term, or you're not even losing money, they are unrealized gains, most likely. But you cannot make money in the short term if you don't have other tools that help you make money. And buying stocks, if that's the only tool that you have, that's fine. This is not an indictment on you. But that is not going to make you money in the short term when the stock market is in a downtrend. You're going to look at these periods of up and down. You're going to be happy when it's green and sad when it's red. That's not the way. For instance, on the SPY, we woke up neutral, obviously. We didn't know whether the SPY would go up and down. Nobody can tell you whether it will go up and down on any given day, right? You can tell long-term trends, try to project long-term trends. You don't know what's going to happen on any given day. So we draw these levels. If we cross above, we buy calls. If we cross below, we buy puts. And you can make money in the short term because you are equipped with more tools that let you handle many more directions than just up. You can trade sideways markets, up, down. In this case, we bought puts here. And I, by the way, broke down this entire trade on my Instagram and my Twitter. So if you want, and I do this almost on a daily basis. So if you want more explanations of trades, you want to see how I day trade, etc., follow me on Instagram, follow me on Twitter. I'm even on TikTok right now, but you will see a link tree below where all my links are there. You can follow me on any one of these platforms, and I go over this stuff almost on a daily basis to try and help you guys. And obviously, we have the trading group full of traders of all levels helping each other. Some of them are way more experienced. Some of them are just beginners, but we're all there to support each other to try to equip everybody with as many tools as possible in order to play these markets. So even if you're holding a lot of stocks, like if you're holding NEO or Apple or whatever, and you don't know how to hedge by selling calls, by buying protective puts, then you're just really going to be sitting on your hands looking at the markets every day for no reason, getting depressed, okay? So those are the two things that I really wanted to discuss with you is don't use a day trader's mentality when buying stocks for the long term. Use this as an opportunity to do your homework, learn how to evaluate a company, and start investing in quality companies. Create a nice long-term portfolio with whatever split of bonds and stocks you want to do. If you wanted to do all stocks, that's fine too. Talk to somebody if you have no idea what a bond is, or you don't have any idea what your bond stock split should be. There are things called TIPS, Treasury Inflation Protected Securities, that help mitigate some of the effects of high inflation. And then the second thing is you have to learn how to trade options, futures, etc. if you want to make money in the short term. There's no other way, right? Don't delude yourself. There's no other way except for picking up some of these tools if you want to make money in the short term, obviously. Anyway, traders, hopefully this was helpful. If you want access to all of the alerts, all of the day trades, all of the swing trades, etc., link is in the description below. Come be a part of a community. We love to help each other. There is a beginner section where you literally can ask whatever question you want. There is no question that is too stupid to ask. We have coaches on hand to help you. Follow me on Twitter, Instagram, TikTok, whatever you're on, if you want to get daily updates of trades, trade setups, trade recaps, explanations, etc. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.